We know that a share is just a tiny piece of a company. But have you ever stopped to think about how that tiny piece actually gets from one person to another? I mean, in a country as huge as India, how does that even work? Well, today we're going to zoom out and look at the big picture, the entire system that makes it all possible. Let's dive in.
Okay, so just imagine this for a second. You own one single share in a company, and somewhere out there, some other person wants to buy that exact share. How on earth do you two find each other? And maybe more importantly, how do you trust them with your money, and how do they trust you with the share? How do you make that exchange safely? Now, before we answer that, let's do a super quick recap to make sure we're on the same page. We've talked about the stock market being this giant marketplace, right? And we know a share isn't just a piece of paper, it's real, actual ownership in a company. So we've got the what down. Now it's time to figure out the where and the how.
Which brings us to the big question for today. Where is this place? Is it a building you can walk into? Is it just a website? Where does all this buying and selling actually physically or digitally happen?
You know, if you've seen any old movies, you probably picture a packed room, just total chaos, right? People yelling, waving pieces of paper around, that whole scene.
Well, you can forget that image. That's pretty much ancient history. The reality today is that you, as a buyer or a seller, will almost certainly never meet the person on the other side of the trade. You don't know their name, you'll never talk to them, you're completely anonymous to each other. And you know what? That's actually a good thing. See, instead of some crowded trading floor, everything now happens through this incredibly secure and highly organized digital system. All that chaos has been replaced by the calm, quiet efficiency of computers and software, all working together to make sure every single trade is fast, fair, and above all, safe. And the heart of this whole digital system, these official marketplaces, are called the stock exchanges. Probably the easiest way to think about an exchange is like a giant Amazon or Flipkart, but just for stocks. It's one central hub where everybody who wants to buy and everybody who wants to sell comes together. This way, everything is organized and everyone has to play by the exact same set of rules. Here in India, there are two main players you'll hear about all the time. First, you've got the BSE, or the Bombay Stock Exchange. This one's the original, the granddaddy of them all. It's actually the oldest stock exchange in Asia, started way back in 1875. Then you have the NSE, the National Stock Exchange. The NSE was a total game changer because it was the first to bring in the fully electronic, screen-based trading system that we all use today.
Okay, so we've got these massive digital marketplaces buzzing with millions of transactions every single second. But that leads to a really important question. How do we know it's all fair? Who's watching to make sure nobody's cheating the system? How is it all kept safe?
And that brings us to the next absolutely critical piece of this puzzle, the market's guardian, which is officially known as the regulator. In India, our guardian is called SEBI. That's the Securities and Exchange Board of India. The best way to think of SEBI is as the referee of the stock market. Their entire job, their whole purpose, is to watch over everything, set the rules of the game, and protect regular investors from any kind of fraud or shady business. Honestly, SEBI is what keeps the market from turning into the Wild West. They're the reason we can all have confidence in the system. Their job is to make sure everything is safe, transparent, and fair for every single person who participates. So, when you put all these pieces together, you start to see a pattern. This whole structure, from top to bottom, is designed to do one thing: build trust. It really boils down to this simple three-part system. First, you've got the organized exchanges, like the BSE and NSE, that provide the official place to trade. Second, there are clear rules that everyone has to follow, so the whole process is orderly. And third, you have a strong regulator, SEBI, acting as the watchdog to make sure the system stays safe and fair for all of us. So if there's one thing to take away from all this, it's this. The Indian stock market is not some chaotic, random casino. It is a highly structured, well-regulated system where every single piece is designed to create an environment built on trust and safety. And hey, on that note, if you're finding this series helpful and it's making sense, you might want to subscribe to NeuralTarot. We're breaking this all down, one simple step at a time. All right, so we've got the marketplaces, we've got the rules, and we've got the referee. The entire system is in place. But who are the players? Who can actually participate? And how does an ordinary person like you or me actually get started? That is exactly what we're going to cover in our next explainer. I'll see you then.